Today, we're going to be talking about the pros and cons of unfurnished rentals versus furnished. And so, in this video, we're going to be mostly focusing on stays that are more than 3 months. So, as a property management company, we do not do sort of the Airbnb furnished style. We refer that to other companies that we work closely with. But one thing that we've seen happen more so in the last 18 months is people that may have tried the Airbnb strategy furnished rental. Maybe it hasn't worked out. Maybe they're just looking for more consistent income month to month to where they have asked us to take over management on longer term leases. So maybe minimum stays 3 to 6 months, or ideally still getting a 12-month tenant, but having the property furnished. And so I wanted to create a video to talk through sort of what we're seeing in the marketplace rent wise here in Tampa Bay. Overall, there has been just a general softening in the market on rent prices. And so when you take a look at the sort of three strategies, which we'll do another video soon here on talking more about, the three strategies that we see that can work are your long-term unfurnished, and long-term typically meaning like 12-month lease unfurnished, your 12-month lease furnished, or your Airbnb style. There's some differences and nuances that can change based on asset style, like price of the house that you're buying to renovate to have on one of these strategies, where the short-term rental stuff we're seeing the least amount of competition, sort of in your higher price point houses that might be closer to $1 million or over, is some opportunity. But for purposes of this video, most of the rentals that we're going to be talking about are differences between unfurnished or furnished long-term 12-month leases. And generally, most of these that we're getting calls about are somewhere between $2,000 to $3,500 a month in Tampa Bay. And so if you don't have the property furnished, in my opinion, the best strategy right now is to do long-term unfurnished. You don't have the responsibilities of wear and tear on the furniture. If somebody only does a 3-month stay, then most likely it's going to be easiest to keep utilities and lawn care and Wi-Fi in your name, which obviously isn't ideal from an expense standpoint. And you're always going to have to be sort of switching that in and out. So most of the clients that come to us with furnished properties, we are wanting them to really push for that 12-month tenant, but we're kind of remaining flexible depending on the type of inquiries that we get. It's just, for our model, that's going to work best for the owner financially, not having to pay us a new leasing fee every 6 months or 3 months. It works better for us and the owner to have somebody in there longer term. So when it comes to pricing the rentals between unfurnished and furnished for your long-term 12-month tenant, we're going to try to go off the comps in the market, but there's just not a lot of people that do the furnished long-term 12-month leases. That's just not a lot of inventory. Most of those are failed Airbnb strategies coming back onto the market as long-term. That's pretty much every call that we've gotten that's been that scenario. Was that we have one that it was an owner occupied that wants to just leave all the furniture, but all the others have been basically Airbnb that has not worked out for whatever reason, probably mismanagement. I don't know if these people have professional management companies. There may have been a lot of competition in the marketplace for their style of house or property and bedrooms and baths, so it can be a viable strategy doing Airbnb. But the calls that we're getting are mostly those people that had Airbnb that may not have worked out, or they may have one consistent sort of set income every month and not go through so much seasonal ups and downs. So when we're taking a look at rent price, we're going to try to find, if you have a furnished property, we're going to try to find a furnished comp. If there's not, then, we just don't see a huge premium, so maybe it's an extra 100, $200, maybe on the high side, an extra $300 a month to have something furnished. Potentially, if you're also including mowing, any of the utilities, something like that, which again, we wouldn't normally recommend. It just depends on a little bit how the property's set up, or if you have Wi-Fi that you just want to include, something like that. But generally, I would say it's probably closer to that $200 mark. Again, but with market rents softening, you may actually just get basically what you could have on a long-term unfurnished. And then you have all the extra exposure to wear and tear on the furnishings, and that sort of thing. So that's from like a pricing standpoint. What we're going to do is just look at the general comps. If we can't find anything furnished and we're trying to price a furnished long-term rental, then we'll just go unfurnished and just try to make an educated guess on how much that we can achieve over that. And ideally push for as long of a stay as we can, at least for the first cycle. And then if that tenant moves out, maybe we unfurnish the property. But a lot of times the owners just felt like they had put out a lot of money on the furnishings and they don't want to, either go through the hassle of selling it all, throwing it away, or putting it in storage. So that's a lot of times why they have opted to keep some of those furnishings in. versus going unfurnished. So that's one thing to consider. We think that sort of unfurnished is the best model, at least right now, versus long-term furnished. To me, I would either go full Airbnb style, nightly rates, and you can increase the stay length, or your long-term unfurnished. Like, to me, I don't see really anybody buying a property and going furnished 12-month rentals. Like, that's not probably the best use of capital, on my opinion. I would just go either one way or the other. So we talked about pricing. There's obviously the wear and tear on the furniture. So most of the time we want mindful that if they have furnished rentals, you have to know that there's can be a certain wear and tear. There's not always a chance to ding the tenant for it. And you may not want to put the nicest stuff in there, but also if you're moving out and leaving belongings that you used to be yours as an owner occupied, just having that understanding that it's a rental now. So if anything you really value, you might want to take out of it. So we talked about rent price increases and decreases. Marketplace generally seeing a little bit of decrease on the rental side of what we're asking for rents. So if we're pulling comps for a property that's potentially $3,000, $3,200, we're going to want to go on the lower side of that. And our company average right now it's traditionally mostly always been under 30 days. If it's really slow, November, December, January, it might creep up a little bit. National average we're seeing right now is actually over 45 days. Of course, it can vary depending upon an apartment or a house or price point. The most competition that we see right now, according to Zillow, is in our recent newsletter. 1,500 to 2,500 is obviously your most competitive landscape. And the inventory in that area has probably increased about 10% just in the last 30 days. So we're in the middle of 2025, even more inventory in those price points. So yes, that's where most people are renting from, that price point. You have a lot of competition. So not only do you have just competition in general, the market dynamics have shifted a little bit. So you're sort of battling decreases in price from increased competition, but just the market itself. So looking at incentives, that sort of stuff can always help, get somebody in quicker. But just across the board, whether it's going to be furnished long-term 12-month or unfurnished long-term 12-month, going to see some rent pullbacks on that side of things as well. So that's kind of what we would take a look at from furnished, unfurnished, and then the inventory side of it, right? So like we usually put that sort of on the owner's perspective or sort of responsibility, which we can help with. But our Airbnb partners are going to do a full documentation of all the furnishings and stuff. Whereas when you come to us, that's something that we also want you to assist with, is documenting what's in the property, videos, photos, that sort of stuff. And just kind of having that understanding that it's a little bit different model on how the properties run than a sort of Airbnb style. So ideally, tenant that's furnished 12-month, they would still put electric, water in their name, be in charge of their own Wi-Fi, own lawn care, that sort of stuff, because it's such a long lease term. But I think if it's going to be under 6 months, that's something that we would probably just try to price into the rental, or just say, hey, it's going to be too much of a hassle moving it in and out. Let's just include that as part of the rental price. So from our perspective right now, long-term unfurnished seems to make the most sense, but always happy to take a look at whatever properties you guys have, different strategies. If you want to do a mixture, some of our multifamily clients might do a mixture of strategies within one complex. Just keep in mind that if you're having to refinance soon, or you might be looking to get a refinance or different debt service sort of ratio loan on the property, DSCR loan, they may not look favorably to the short-term rentals or short-term stays. So that's something to think about too, is if that's going to be something on your radar in the next 12 months, then your best bet is probably going to be long-term. Furnished or unfurnished would be fine. But just know if you're doing the shorter stay stuff or not having these long leases or Airbnb strategy, it can impact your the type of loan. So it's something you want to look at financing, I think, ahead of time, depending on where you're at in the strategy, to just so you don't sell yourself short and put yourself in a pickle on refinance or value or long-term rental values playing into the debt service on the property and not getting a good appraisal and that sort of stuff that can hurt you down the road. So just being a little bit thoughtful about types of loans that are available for each of those strategies. So as you move forward, you have access to capital, or getting a HELOC on investment property. There are some companies that do that as well. You could always reach out to us for a referral. It's not something that comes across super often that people do, but it's a nice option for investors that if you don't want to refinance because you have a 3% on a property you bought 4 or 5 years ago, being able to still tap into the equity. So hopefully this video was helpful. We'll be putting out some more sort of short-term versus long-term rental dynamics and insights for you guys. And again, this is where we're at in the market now. So 24 months from now could be a little bit different on what strategy is kind of making the most sense. But definitely long term, having some price compression, just being conservative, especially if you're looking at underwriting new deals to buy, would not be penciling too much extra on the potential rent growth. across the board. I would assume that rents are going to stay flat or possibly even decline a little bit if it was me forecasting something over the next 12 to 24 months. Hope you appreciated this video. Give us some feedback on other stuff that you guys would like to see. Subscribe to the channel. We'll see you later. Thanks.